Hello traders, Cousin Vinny coming to you from theclosingprint.com on November 17th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week with the exception of small caps which were marginally lower. We had most of the big cap tech names moving higher last week with the exception of Amazon and Nvidia and Intel. Facebook, Apple, and Microsoft, as well as Tesla, were the big winners. The bond stock ratio is neutral. Looks like it might be turning slightly. We'll discuss that in a minute. HYG and junk are neutral to slightly bullish, and the Dow Composite is bullish. The S&P 1500 is bullish, and we saw XII bullish, making new 52-week and all-time highs. NEEMO and NAMO is neutral. The cycle is confirmed. Breadth thrusts move lower last week and then thrust higher to end the week, which is bullish for the week ahead. We had NYHL with a bullish cycle and a spike on Friday, indicating there's more new highs than new lows. So that's a good sign going into this week, as well as the New York Stock Exchange advanced decline, which did exit the red zone and is at a new all-time high. Put-call ratio is a little bit concerning, though it did manage to move back up towards the neutral zone. By the end of the day, it's at 0.84. CPC, the equity only, is at 0.49, and the index only is at 1.16, a little bit overheated on the bearish side. VIX is at 12.05. It's at the low end of its cycle. The 50-day is still descending. And bullish percent is at 60%, which has room to the upside before it gets exhausted. Skew did move a little bit higher last week. It's at 126. Of course, we know over 135 would indicate that institutions are concerned about markets and would be hedging. That's not the case. US dollar had an aggressive bounce last week and then failed as it dropped below the 50-day moving average. That's a good sign. And a tailwind for equities if that continues. Yen is consolidating at the 200-day, and the British pound US dollar did bounce, which is a headwind for the FTSE and the London Stock Exchange. We did see bonds in a descending pattern. It did move a little bit higher on Wednesday, Thursday, and Friday last week, but still in a descending pattern below their 21-day moving averages. 10-year yield is still bullish for equities. Gold is in a descending channel, which is telling you that the fear and safety trade is fading, with copper bullish, creating higher highs and higher lows. We did pull back a little bit last week, but we did turn higher as well on Friday. West Texas crude remains in a 30-week range for the fourth week now above the 20-period moving average. Heat maps are improving for both the S&P sectors as well as the international markets. We'll look at these IBD 50 names going into the week ahead, and we'll look at some relative strength names on the MarketSmith Blue Dot Scan, as well as some top 20 volume percent gainers for the week in green. Bukowski is showing 505 green with the CPI signal green and bullish at 86% since October the 9th. He has 7 patterns bearish, 43 patterns bullish, and 445 patterns waiting for breakout. As usual, the numbers in parentheses were the previous week's data. Bottom line, the markets are a bit extended for the 27th day starting Monday above the 9-period EMA on the spiders. So we are bullish, but we're expecting a little bit more difficulty going into the end of November and the month of December. So we will be a little bit more cautious. We'll be looking for block trades to increase like they did on Friday. We'd also like to see breadth continue to improve. That would confirm that we'd see higher prices on U.S. indices going forward. The spiders, of course, broke out on Friday, gapping up and closing at 311.79. RSI is overbought, showing muscle, We do have a Fibonacci target 1618 at 313.50 to start the week. While volume did increase this week into the breakout and MACD is above its signal line, showing the bulls are in control going into the third week of November. Starting on Monday, it will be the 27th day trading above the 9 EMA. That's a record going back to 1998, as pointed out by Ryan Dietrich in a tweet last week, wherein he also pointed to the fact that the index rose another 8.5% a month later. Capitalizing on this idea, we do see the 10-year yield moving higher, whereby we pointed to its bullish significance going back to 2012 and 2016 in the previous European debt crisis in 2012, where Greece almost defaulted and the EU had to rescue it. And then we had the Asia commodity crisis back in 2016, which led to a reversal in the 10-year, which we're seeing at the present time. History suggests that we should see the 10-year continue to move off these lows, barring any unforeseen circumstances that we don't see presently, which led to a gain in the S&P 500 in 2012 of 66.5%, and then again in 2016 a gain of over 48% after the 10-year reversed and trended higher over the following 18 months to 2 years. Therefore, while we do anticipate we could see some headwinds going into the month of December, the indices are all breaking higher. You can see that the NASDAQ reversed 7 weeks ago and broke above resistance over the last 3 weeks. RSI has yet to get overbought, so we could see more strength in big cap biotech names and big cap tech names as well. Volume has been elevated for the past 7 weeks, and MACD is above its signal line, leading us to believe we could see some pretty decent performance in the weeks ahead. At the same time, the Russell 2000 Small Caps, IWM, did show a little pullback on the weekly. After breaking out 3 weeks ago, RSI is above 50. We are consolidating. We would like to see small cap biotech names and small cap oil and gas and equipment names start to muster some strength. MACD is already above its signal line and rising. We'd like to see more volume. This would indicate we could see those industry groups outperforming in the weeks ahead, and something that we'll look to for confirmation into the third week of November. One of the checks and balances that we look at on a daily and weekly basis is the ARCA Institutional Index, or XII if you're a Stock Charts member. This is the 75 stocks most commonly held by institutions in their core portfolios. You can see these stocks over on the left and their weightings. The key takeaway here is we broke out just like we did on the S&P 500. We're in between standard deviation 2, the outside bands, and standard deviation 1, the inside bands, and that we've just been producing green and blue elder sticks all along the way. The appearance of a red stick would be a first sign of caution, and if we saw multiple red sticks, a reason to go flat or short on the markets and to take profits into strength. At the present time, we have no such signal. In addition, if we look at the 1,500 stocks that make up the S&P 1500 composite, the S&P 500, the S&P Midcap 400, and the S&P 600 small caps, we can clearly see in the upper panel that we are on our buy signal. The line is green and rising. Histogram is above zero line and producing a higher bar on Friday, and we had a follow through just like the indices did to end the week. And if we look a bit closer, we can see that previous breakouts of consolidation patterns that opened up on a gap or a large candle followed through for at least another week. We see that here back in September, and again when we broke out right along this line in the last week of October, we had this bullish candle that eventually followed through and moved higher. That's no guarantee that we will repeat, but all of the indications are we're on a buy signal and histogram is confirming. In addition, these are 1,500 stocks, so unlike the New York Stock Exchange advanced decline, there are no stocks, mutual funds, or ADRs that will skew these three. If you break them down, S&P 500 advanced decline and the upper panel, mid cap advanced decline, and small cap advanced decline. We already talked about the small caps need to continue to perform. The S&P 500 advanced decline percent is at all-time highs and rising, as well as the mid caps. So it's only the small caps that we're waiting for this week, and an improvement in breadth is expected as we see in these three components. While the cumulative readings are good as well, we need to check the daily advanced decline percent, which did show a decrease in the number of stocks that were participating over the last week until we saw Wednesday and Thursday's price action. In the upper panel, we have the big caps, mid caps, and small caps in the lower panel, and of course the NASDAQ in the lower panel. Now this isn't cumulative, rather this is a daily tally of what's going on in the markets. Breadth-wise, you can see NASDAQ is turning up, so is the small caps, mid caps, and large caps, having pulled back, which is giving the markets the energy to follow through if we do see a gap up on Monday or a continuation of the trend that started on Friday. This would support a continuation at the present levels indicated. In addition, if you look at all the stocks that trade on the New York Stock Exchange, depending on the current status, we have anywhere between 2,500 and 3,000 stocks. You can see the cumulative advanced decline line is rising and making new highs in an ascending channel. There's always a possibility this can turn back over, though at the present time this is giving us a bullish indication. Now, I don't want to sound too bullish going into the week, so there are some things, some caveats, where we see cycles, the black line in the NEEMO, the NASDAQ McClellan Oscillator. While it did dip last week, it wasn't as major as we've seen previously back in August and September, and we're already start to move back towards the zero line, so the black line could very well turn back up this week. In addition, the NASDAQ is showing you blue elder sticks going into the week, and NASI, the summation index, is flattening out but has not crossed over and started dropping precipitously like we saw back in late July, early August, and again in mid-September. The same goes for the NEEMO for the New York Stock Exchange. Again, remember there are ADRs, preferreds, and mutual funds in the New York Stock Exchange that kind of skew NEEMO versus the advanced decline percent for the big caps, small caps, and mid caps that we showed you previously. So while we do use this for a check, we do see that we did dip a little bit more on the New York Stock Exchange. There's more stocks than the NASDAQ, and we're starting to move back towards the zero line going into this week. We also see blue and green elder sticks as previously pointed to, while NYSE has crossed over and started dropping like we saw again in late July, early August, and in mid-September. So we'll be watching this very closely going into the week, paying very close attention to, and I have to repeat this, block size transactions on the S&P 500, NASDAQ, and IWM, as well as improving breadth and more stocks participating this week. So those are key things for a takeaway going into the third week of November. Finally, we will be starting the week with the VIX indicator green. This is taking VIX and flipping it over so that you get a bullish signal, which would correspond correctly with the S&P 500 moving higher. Short term, this is a 60-minute indicator, looking for higher highs and higher lows when this indicator is green, and looking for lower highs and lower lows when it's red. We start out the week with a bullish signal. We've also talked about this chart previously. Key to any breakout, we need to see transports moving higher. Transports, of course, being one of the lifeblood indicators in the markets. Transports moving higher and breaking out is what we've seen in previous productive rallies, in addition to what we were looking at previously on the 10-year Treasury yield, breaking out in 2013 and again in 2016. The break of these trends led for the markets moving higher. This is IWM in the lower panel, transports in the middle panel, and of course S&P 500 in the upper panel breaking out like it did previously. So that's one of the other things we'll be watching going into the end of the year, which would show a risk-on appetite for investors. Finally, we have the Dow Composite, Dow Theory. These 65 stocks hail from the industrials, transports again, very important, and the utilities group. As we moved higher and away from the 9 EMA, RSI is moving higher, volume is increasing, MACD and stochastic are both in bullish configuration. Here we have the bond stock ratio with the S&P 500 weekly and the top frame. We can clearly see that the bond stock ratio has been dropping. It is starting to show a little turn. Something we'll be watching this week, the ratio between the UST 10-year bond and the S&P 500. Now, we did see a little change in direction on the 10-year yield, which we talked about previously, which has been retracing or reversing off of the lows like we saw back in 2012 and 2016. Now, if this trend does continue and follow through this week, this would be another bullish indication that investors and traders need to keep in mind. With the momentum clearly turning to the upside that we've had previously as well, and the S&P 500 breaking out for the last couple of weeks. If we're bullish, we'd also want to see a follow through. We're seeing higher highs and higher lows on the high yield corporate bond ETF, a good measure of a bullish sentiment in the markets when it's rising. If this were to drop off precipitously, like we saw back in September, October, before the markets really started to gain momentum to the downside, this would be a bearish signal and something that we've watched in the past, because yields will definitely change direction, especially the high yield corporate debt and junk bonds, giving us a signal before the markets start to roll over. So this is something that we always watch for each week, junk bonds and high yield corporate debt. So just make a note of it if you are a new member and this is your first weekend video. We need to see junk bonds continue to move higher this week. Otherwise, we would have more of a caution signal like we had back here in late September going into the October rally, of course. In addition, I did note that some traders in the trading room were taking long positions in TLT. TLT does have major resistance overhead. What I do see is a descending pattern of lower highs and lower lows, especially in the current past few weeks. We're right at the 20-period moving average. A move above the 20 period would necessitate a test of the 50 period most likely, and I would think that as this turned lower, this descending pattern will continue, so any move up to 140 will most likely get rejected. We've got overbought conditions on stochastic, and MACD is below the zero line. While it is crossing upward, I do see a descending pattern and one that should be respected going forward. If you're trading bonds, you also want to keep an eye on the instrument that bond traders use as a reference or a benchmark, AGG, the Barclays Aggregate Bond Fund, ETF. We can clearly see what looks like a rounding top, a double top with a series of lower highs. We did have a bullish week last week. However, MACD has been drifting lower very quickly. Volume has picked up and stochastic is bouncing a bit. So I'm looking for confirmation that institutions are rebalancing their portfolios after a 12-month run. We also saw the British pound US dollar pair moving higher, strength in the British pound and weakness in the US dollar, leading to weakness in stocks that are traded in London on the exchange as well as the FTSE. We can see this mildly rounding top and price action continue to make lower highs and what looks like are going to be another lower low this week if the British pound US dollar pair does continue to move higher. We would expect to see the US dollar moving lower. We did move above the 50 period last week and then retraced on Thursday and Friday, closing below all of the moving averages with the exception of the 200 period. We've tested that twice before, looking for a failure and a retest of the 200 period, which would give us a tailwind in U.S. equities in the interim, as we watch for MACD and stochastic to roll over and move in a bearish direction. All of this happening, of course, as the yen continues to consolidate right around the 200 period moving average, producing lower highs and something of a flat base, but starting to make lower lows as it moved below the 200 period. So depending on what happens with the yen, you'll also see a commensurate move in the Nikkei, which has been trending bullish over the last few months as the yen continues to move lower. Looking at gold and commodities, this gold SPY ratio clearly shows the ratio dropping, which is telling you you don't want to be in gold, you want to be in the S&P 500. Now we could see a higher low and a reversal this week. So watch gold, which is in a descending channel and could turn up. A number of you asked me about this weekend. We did see gold turning upward towards the end of the week, but we're in this major descending channel. So it has a bigger resistance to overcome to the upside with the 50 period rolling over and all the moving averages overhead. RSI is below 50, so that tells us to respect the trend, which is currently down. And we're below a major resistance level overhead, a reverse Kirby if you will, down to these levels at 1440 before it runs into support at a previously traded area that we saw gold break out of back in August. So look for a test of 1440. If it loses that area, it could even drop a bit further, which would indicate that there's less of a fear and safety trade going on. Investors would transition part of their portfolio to gold if there was a worry or a concern or fear in the market and a need for safety. Counterproductive for equities, of course, didn't seem to have much of an effect last week, is copper, a leading economic indicator, back below its 9 EMA and 20 SMA. In this case, we did see a bounce on Friday, possibly shorts covering, looking for this area to hold. We did have this volume by price area of resistance overhead, a little bit difficult to overcome. We briefly pushed above it 2 weeks ago, retraced. If you're bullish equities, you'd like to see this moving higher along with yields, breadth, and block trades as we previously talked about. So look for a bounce in copper in the short term if you're bullish equities. And also look at crude with the same lens or perspective. Crude oil is positively correlated to the market, so a move higher in West Texas and Brent crude would be viewed as market bullish. Over the last 30 weeks, we've been in a sideways range. Over the last 4 weeks, we've managed to move above the 20 period and close above. So that's a bullish indication. If we can get some momentum and test the 63.38 level in the short term, that would be clearly bullish for the markets. MACD is above its signal line, and stochastic is now over 80. On Wednesday, we also talked about how the markets were consolidating before breaking out on Friday, and we thought the culprit was most likely sector rotation. If you look at these sector rotation graphs and you look at this green quadrant and this blue quadrant, this is improving and leading sectors. You can see, if we animate this slightly, you can see how XLF, XLI, XLK, and XLB have moved into the green quadrant, and how XLE is starting to improve over here on the left, and how XLV is starting to pick up, and other sectors, which would lead us to believe we could see higher prices in the short term. Going into the holidays, of course, we'd want to see consumer discretionary outperforming. With this candle glance, we can clearly see all of the sectors are above the 20, the blue line, and the 50, the red line, with the exception of XLY, which is having a little difficulty here, but it's starting to lift. XRT is starting to push off, so stocks like Lulu, Tanger Outlets, TJ Maxx, Walmart, after earnings, these stocks are starting to move higher, Target, etc. We need to see those stocks moving higher into the holidays, while utilities over here on the right and real estate are starting to reverse off the lows. More sectors are performing now, and few are pulling back as of Friday's close. So this is also bullish going into the last 2 weeks of November. Here are the IBD 50 stocks for the week ahead. One thing you'll notice right off the bat, 43 stocks closed higher and green, while only 7 moved lower. Note the stocks that showed relative weakness to end the week and the stocks that showed relative strength. Many of the ones in the top of the list we've traded recently or had in watch lists over the last few weeks, with InMode performing very well on Friday. Stocks like Adobe also performed well, consolidating much like the indices, then breaking out on Friday. Note the 20-50-day cross. We see a lot of 20-50-day crosses bullish on the week. This is something that we would consider as we would be interested in trading stocks that are getting crossovers, the 9 EMA, the 21-day, the 50, etc. BABA, of course, bouncing. Nice follow through this week with wicks on Monday, Wednesday, and Thursday's candles. Price action moving back above the 9 EMA, indicating with RSI rising as a function of price that we should see follow through this week. A test of 188.28 would be in the cards. MACD is above its signal line, and volume is above average. We looked at CB Richard Ellis, CBRE. This is a REIT that specializes in office and office properties. Breaking out on Friday, testing these recent highs. Momentum is clearly bullish, RSI is rising, volumes increasing, and MACD is above its signal line, leading us to believe we'll see a follow-through on Monday and Tuesday this week, having recently pushed through the 9 EMA before breaking out. Use your trade of the day setup for entries, exits, and stops. Booz Allen Hamilton, looking for follow-through here as well. Price action moving away from the 9 EMA, having recently consolidated along that period last week, breaking out on Friday, looking for a follow-through and a test of these levels at 74.68. RSI is rising above 50, respect the trend. Most likely we're going to see 75.93 tested probably by the end of the week, 74.68 midweek most likely. Volume increasing and MACD above its signal line. CarGurus, we talked about this one last week as well. Nice little flag and then a breakout on Friday. We've got a 21-day crossover through the 200 period moving average. We're showing RSI muscle, volume increasing, and MACD above its signal line and rising. All the ingredients that you want to see on a breakout for a continuation and higher prices going into year end. CDW, a computer software, hardware, and security company that's been on our watch lists repeatedly over 2018 and 2019. This company continues to trend. Note the 21-day, nice clean chart. Tests of the 9 EMA keep getting bought, and the 21-day. We have a nice little tight consolidation pattern last week. Looking for this to push higher on Monday and follow through as RSI shows strength and muscle with MACD above its signal line and rising. We'd just like to see more volume on any breakout Monday, Tuesday, or Wednesday. Copart looking for a follow through. This company restores flooded and damaged vehicles for insurance companies and then resells them to help the insurance companies with payouts. While the company continues to trend, the 200 period is rising, RSI is above 50, and MACD's crossed, volume increasing going into Friday's breakout. Cosan moving higher, CZZ is the symbol. Looking for a nice follow through. We've got targets 1709, 1761, and 1812 in the short term. Nice reversal on Thursday, followed through, pushed above the 9 and 20 one-day moving averages on Friday. MACD's turning as a function of price. I'd like to see that turn back up quickly and volume increase for any considerations of a trade on this relatively inexpensive stock. Out of Brazil, that produces and distributes gasoline, ethanol, diesel, and fuel oil to service stations throughout the country. Notice RS line is climbing at 97. Earnings were insane over the last two reporting periods. Looking for this to follow through and continue higher in the weeks and months ahead. Notice annual sales and earnings climbing. It has good IBD metrics as well for stock trading in Brazil, outperforming many of its competitors, which if you have a MarketSmith subscription, you can check out the competitors on the weekly chart in the bottom left-hand corner. You can see Valero there, Phillips 66, and Marathon Petroleum as a few to look at going into the week ahead. Edwards Life Sciences and many of the stocks in the healthcare group have been breaking out. We saw a push higher on Wednesday, a flag, and then a follow through on Friday. Most likely this stock is going to continue higher. RSI is above 50 and rising, with volume increasing and MACD above its signal line and bullish. ENV, InvestNet, is continuing its bullish trend, having reversed and followed through in October on this reversal candle. It just continues trending, looks very nice going into the next week or two, with a little elevated volume on Friday, with the company recently reporting a nice beat of 13%, cup pattern, relative strength line falling a little bit on Friday on that down volume. Annual sales and earnings look good, and some decent IBD metrics for this web-based investment solutions and services company that helps out financial advisors in the United States. Euronet Worldwide looking for a follow-through. Having been in a 4-month downtrend, it reversed in October, followed through, moved above the 9 and 21 day, continues to move higher. I like it better closer to the 21 day or the 9 EMA, so any flag or pullback, the 9 EMA will most likely catch up, would be a better entry. Most likely this will continue to move higher this week. FleetCor does look bullish. It is a flat sort of range bound pattern, so it's not my favorite setup, but it looks like it's going to continue higher this week. MACD's turning, volume increasing, and RSI is above 50. Fortinet too extended for us to chase, but just wanted to point out it continues this 3-week pop higher on earnings and follows through, showing RSI muscle. The reason I wanted to point it out is that just because a stock is showing RSI overbought does not mean it has to stop. It can also mean that there is super strength, the reason why we call it RSI muscle to begin with. MACD's above its signal line and volume is increasing. Franco-Nevada, one of the few gold stocks on the IBD 50 that's looking pretty good. It's in a sideways range, watching how gold performs and Franco-Nevada going forward as the dollar continues to drop, which could have an impact on these stocks on the IBD 50 that trade in the gold group. HEI, Hyco Corp, nice little rounding pattern, starting to build the right side of a cup. This is probably going to continue higher. MACD's above its signal line, rising, showing bulls are in control. Volume increasing over the last 4 trading days, and RSI is above 50 and rising. In mode, nice follow through after earnings. Volume has been increasing. MACD's above its signal line. This is probably just going to continue higher. I wanted to take it last week. I missed my opportunity on Wednesday. Many of you, like Gino, I believe, got into this stock. This week looking pretty good on Wednesday, Thursday, and Friday. RSI muscle showing there's a lot of strength in this current move. Intuitive Surgical looking like a follow-through. Nice little breakout above these pivots. Looking like it's going to continue this week. Volume increasing as it breaks out and RSI rising, a sign that institutions are picking up shares. JP Morgan and the banks looked pretty good last week. On Wednesday, reversing into Thursday and Friday. Looking for a follow-through. The trend is up. This is your better entries on pullbacks in a bullish trend with RSI above 50. MACD will turn back up as a function of price, of course. I'd like to see this elevated volume showing that institutions are making themselves known, supporting the price as it continues to move higher. Lululemon on last week's watch list and the week before. This continues this reversal off of this hammer or reversal candle going into earnings scheduled a few weeks from now. RSI relative strength line is climbing, annual sales and earnings increasing, and IBD metrics are stellar as this one continues to break out to new highs. Microsoft again this week, nice flat base. The longer the base, the higher in space. We have a target of 168 on Microsoft. As we pointed out over the last couple of weeks, having a base reset to first stage base and a breakout. This was a second stage base. We were looking at this to break out on the weekly time frame. Finally did towards the end of the week with a weekly MACD cross and RSI moving into the overbought zone into year end. Momo, a Chinese stock, nice little pullback, 21-day moving average, bounce back above the 9 EMA, nice bullish candle on Friday, looking for a follow through and a test of 40.46 in the short term. RSI above 50 and rising, MACD's above its signal line, and bullish with volume increasing on Friday. Planet Fitness recovered quite nicely, producing higher highs and higher lows. The 21-day is crossing up through the 200-day now. Nice consolidation over the last week. Looks like it's ready to break out. First target resistance 73.62, and then we could see this upper level at 79.80 over the next few weeks as the company trades post earnings, beating by 29%, 28 cents versus 36 cents on November the 7th. We're looking for follow through. Relative strength line should continue. Annual sales and earnings are increasing, and IBD metrics are decent and improving. Restoration Hardware, RH, gapping up on news and volume after Warren Buffett takes a stake in the company. That was reported on the 15th. And two new stocks that he is buying. Just search this title. ResMed, also a nice looking chart here. Descending channel, gap up, moves to the highs, comes back, consolidates along the 9 EMA, and now it's starting to gain some momentum. MACD has turned as a function of price, of course. Volume increasing and RSI is rising. Look for a follow through and a breakout to new highs on ResMed this week. Royal Gold, the other stock that I'm impressed with, next to Franco-Nevada and Kirkland Lake. Descending channel pattern. If this breaks above the descending 21-day, this is squeezing just like Starbucks did. Moved above the 21-day. We're looking for Starbucks to test this 86.79 and change the direction, build the right side of a cup. MACD is above its signal line. RSI is rising back above 50. Where we already have a position in Starbucks post earnings. Spirit Realty, SRC, continues this nice bullish clean looking chart. Every time it comes down to the 9 EMA or the 21-day, it follows through, showing you new buyers, institutions adding to their portfolios, MACD crossing, and RSI continues to rise. Look for a breakout. I'd look for a little pullback first like it did previously over the last 8 months. Store Capital, another REIT, following through after testing the 9 and 21-day. Buyers kept showing up. Viva Systems, we looked at it last week. It was consolidating between the 200-day and the 21-day, just like the Starbucks chart I just showed you a couple of minutes ago. Followed through this week. Viva Systems wasn't on the watch list, but it did break out nonetheless. Looking for rejection right around this area These previous pivots are bag holders that got stuck here when price action reversed. Look for initial rejection there and a flag. That would be your best entry this week with MACD above its signal line, volume increasing. This is most likely going to blast right through this area. The way this looks with the last 8 days just buying all day long going into this reversal back above the 21-day. 90 EMA is quickly chasing price action, and RSI is above 50 and rising, suggesting there's more room to run to the upside before getting overbought. Zito Express also looks pretty interesting. Volume increasing on Friday, looking for a follow-through and a breakout in the short term. A few stocks of note from the MarketSmith. Stocks showing up with above average volume. Laser, LASR, looking pretty strong, looking for a follow-through. Amarin, which a number of you were trading last week. This one followed through. Nice cup pattern. Look for a little handle now. $25 stock. Halo also looking very strong. Above average volume last week. Just continues to catapult higher. Look at the weekly time frame. You can see that this probably has a lot more room to run. The green area is your target in the short term. Logmine following through. This is one that Grover pointed out last week. Followed through. Nice pop. Looking for the weekly for some targets on this one. Nice descending pattern. Note the breakout of this descending channel or wedge, most likely lead into higher prices. Don't chase it. Look for a nice little flag on Monday or Tuesday, potentially for an entry. Above average volume. Annual sales and earnings continue to climb, and decent IBD metrics. CRSP, this is one that a number of you were trading in the room last week. Nice little cup pattern, flag, a breakout, and follow through. It's still very close to the buy zone, a little bit above it, 6% above the pivot in the last 4 days. Above average volume. Very nice earnings beat, 324% going into the end of the year. Kutera, also a stock that a number of you were trading it last week or mentioning it in the room. Looking for a follow through. Earnings beat, looking for a follow through and a break above the blue buy zone in the weeks to come. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on November 17th, 2019 with your weekend video newsletter. We will be looking for a follow-through. Most of our indicators are bullish going into the week. We'll send out a watch list. We will send out a watch list around 11:30 tonight and around 8:30 on the West Coast. So look for that in your inbox. Otherwise, get outside, enjoy the rest of your weekend, and we'll see you in the morning. Take care.